Hey guys, Kai here with another trading tutorial for you. Today I want to cover the ATR indicator and just quickly explain how you might want to use it on your charts. So the ATR indicator is this red line graph you can see at the bottom of my screen. It stands for average true range, and what that is simply the average movement over the last 14 bars. So to calculate it, you take the highest point of the candle, subtract the lowest point of the candle, and do that 14 times and take the average. So what we use this indicator for is to set our stop loss, to set our take profit, to gauge whether there's going to be a big move or to see if there's going to be some consolidation. So let's have a look at the 29th of April, right about there where the mouse is. You can see that the ATR is quite low, actually the lowest point on this chart at the moment, and that's an indication that there may be a big move about to happen. It's not a guarantee, and it doesn't tell you what direction this move is going to be in. It just says we haven't had much movement for quite a long time, so there's a high likelihood of there being a big move. Now after we got our big move, we can see the ATR is 3 or 4 times as high as the average, and once we start to see the peak come down, that's an indication that there's going to be some consolidation. So from when the peak forms until it gets about to where the average is again, you can expect there to be some kind of consolidation or sideways, a little bit up, a little bit down, but not really making any new highs or lows. Now what people usually use this indicator for, most of all, is to know where they should place their stop loss so they don't get stopped out too soon or to lose too much money, and also where to take profit. So say we can see Bitcoin making lower highs and we decide we want to enter a short trade on this candle. What you would do is look for the recent swing high of 9,210 and then check what ATR value we're currently sitting at. So let's say we'll round it up to 105. We'll add 105 to 9,210, which gives us 9,315. And we'll do the same thing for our take profit, because we don't want to be greedy and we want to take our profit before everyone else starts to, and before that support area. So we'll make this 7,995. You might also want to put this slightly above 8,000. 7,995 is just below 8,000, and big even numbers tend to have strong psychological support. I'll leave that up to you, but I'll just hit OK for now. Now what this does is it stops us getting wicked out. So say there wants to be, the price starts to get pushed up and there's one last rally, we don't want to put our stop loss exactly here, because if it wicks just above and then gets rejected and pushed back down again, we don't want to get taken out of the trade. But we don't want to have our stop loss way up in the middle of nowhere and risk losing a very large amount on this trade. The same goes for the other direction. We don't want to try and squeeze every last cent out of this trade. We want to take the big bit in the middle and get out slightly early, but not too early, so that we do it before everyone else does. That's why the ATR indicator is so useful. Leave me a comment if you have any questions, and otherwise I'll see you next time.